I was reading an interesting article in the Financial Post the other day. I think it was posted about a week ago, where it said Canadians' mortgage interest payments were growing at a faster pace than they had in more than 30 years, which is pretty crazy considering that not everybody's interest payments have actually changed yet if they're in a fixed rate mortgage that hasn't renewed. There's still a good chunk of people that have 2 or 3 years left on their mortgage before their interest rates will increase. So if we're already seeing that much of an increase in how much money people are putting towards interest payments, it's a pretty substantial increase. Because of that, the article also said that interest rate payments are expected to peak in late 2024. So we still have a ways to go. Even if the rates kind of just stay steady where they're at right now, all those people that have to renew their mortgages are going to come up and have higher interest rates when they renew. Now, if you're trying to make sense of what's going on in the Canadian real estate market, then make sure to like this video and subscribe. I do lots of videos about the Canadian real estate market with a focus on Edmonton. So make sure you subscribe and hit that little notification bell so that you never miss another video. Now, if you're one of those people that has a mortgage that's going to be renewing in the next year or two, then I would definitely suggest looking into this so that you're not surprised, so that you can start making plans in advance. I know it's scary, prices have gone up for a whole lot of things. Inflation has affected all of us, but if it hasn't affected your mortgage yet, and it's going to in the next year or two, rather than being blindsided, I'd suggest going in and actually doing some calculations to find out what your payments might look like at renewal. There's a whole bunch of different calculators that you can use online. If you haven't already, I'd suggest going on to one of those mortgage calculators, checking what it would cost you if you renewed using your same amortization that you're at right now. If you had a 25-year amortization when you started, and you're going to be renewing with a 20-year amortization, you could see what that would look like at today's interest rates and how that would affect your payment. And if that number scares the crap out of you, and if it's going to cause problems, then it's better to look at that now so you can start looking at options. Now, obviously, interest rates will continue to change over the next year or two, so what they are right now is not what they're going to be when it comes time for renewal. But if you're in a situation where that renewal is really going to cause a problem for you, at least you would have time where you could try to find something else that might work for you, whether that could be selling your property, looking for refinancing options. Sometimes people get stuck having to renew with the same company because they're not able to qualify to refinance somewhere else. So you might not have much of a choice but to stick with your current mortgage provider or your current lender. But I would definitely recommend talking to a mortgage broker about these options. You could even talk to your bank. Like I'm a realtor, so I'm not a mortgage broker. I don't know the ins and outs of all those things. But it is important for people to plan ahead if they think this is something that's going to have a substantial impact on them. So I wanted to just kind of point that out, that it's good to look ahead, see if you can do something about it now, prepare, try to budget for it. If you've got time, at the very least, you could try to adjust some other things to try to make sure that you've got some extra funds available for that. Now, despite all of that, there was another interesting article that I read based on some surveys that said Canadians remain optimistic about long-term financial performance of real estate. So even though everybody's getting beaten up by these higher interest rates, a good chunk of Canadians still remain optimistic about the performance of the real estate market and it doing well over time. Obviously, if the payment is the main concern, being optimistic about values going up over the short to medium to long term isn't going to help much with that. But I thought it was an interesting sort of contrast where it's like, oh man, interest rates are higher than ever. Everybody's paying more interest, yet people remain optimistic about the real estate market. So let's just dig into this report a little bit here. So it said an overwhelming majority of Canadians remain confident about the long-term financial performance of residential real estate, according to a recent report by Mustel Group and Sotheby's International Realty Canada. So it looks like they surveyed 2,000 people between 18 and 77. They were in Vancouver, Calgary, Toronto, and Montreal, so you get a bit of a mix there. And it suggested that 49% of urban Canadians believe that a home or residential real estate purchase will perform the same or better than their other financial investments in the next 12 months. So that's interesting. Especially, like I said, the last year, everybody's been talking about interest rates a lot. It's been beating everybody up. So it's very interesting to see how optimistic people are, at least according to this one survey. I know I've definitely seen a bit of a shift in the market in terms of people getting a little bit more confident now that we've gone through most of the interest rate hikes. The Bank of Canada has indicated that they're going to attempt to hold interest rates, or at least that's how I'm interpreting it based on my information sources. So I think that's probably probably helped give some people more confidence that the pain is, most of the pain has stopped, and maybe you can be a bit more optimistic. It also said 1 in 3 urban Canadians are now more likely to buy a home in the next 5 years as compared to their intentions in January 2020, while a similar percentage are also more likely to sell within the next 5 years than they were before the pandemic. So I don't know if that kind of cancels them each other out. Apparently the baby boomers are the most optimistic about the performance of the real estate market. Although apparently it is high across all generations, they're the most optimistic in the short term. Yeah, it went on to say that about 60% of urban Canadians across generations believe that a home or residential real estate purchase will perform the same or better than their financial investments in the next 10 years, including 35% who believe it will outperform them in that time and 24% who believe performance will be on par. Finished off the article by saying that despite rising interest rates, inflationary pressures, and economic uncertainty, the report highlights that confidence in the long-term financial performance of residential real estate remains resilient. The report's findings suggest that the pandemic has not significantly altered the overall confidence in the Canadian real estate market. It remains an attractive asset class for investors across all generations. That's interesting. I thought it would be a good article to sort of balance out the pain about the rising cost of interest payments, just to show that, I guess as a whole, Canadians are still pretty optimistic about the real estate market. There was one other article that I thought would be worth mentioning in this video, and this is one I saw on Stories, some real estate news that they published on March 17th. They said sidelined Canadian buyers now looking to return to the housing market. It says, despite high interest rates and the soaring cost of living, Canadians are making a return to the housing market as the ground thaws. This was another survey, but this one was done by Royal LePage. One of the takeaways is all it took was a tiny bit of relief on the interest rate front to get some people back into the market. According to the survey, more than 1/4, 26% of Canadians who put their home purchase plans on hold over the last year due to rising interest rates will resume their search this spring. Now, the survey found that nearly 1/4 of Canadians were in the market for a new home this past year, but 63% of them said they had to postpone their plans due to rising interest rates. I know a lot of people, when the interest rates started to go up or after they did go up, everybody just said, hold on, all right, let's see what's going on here, what's gonna happen to the market, how high are the interest rates gonna go? And a lot of people just kind of got on the fence or, stopped altogether because nobody likes to get into a market that has a lot of uncertainty. But now it's starting to seem like there's some early signs of people that feel like the dust has settled a little bit, and now they're kind of getting back into the market. I'm in the Edmonton market. Obviously, that's the main area that I see, and it's not crazy like it was last year, but right now we're definitely seeing some pretty strong buyer activity. We're getting into the spring markets. The number of sales is picking up. Inventory hasn't quite picked up with it. Just from conversations I've been having, there are a lot of people that were really hesitant about buying in the fall and the winter months, but now they're getting out there again and considering buying. So this kind of fits with my own experience in the Edmonton market. The article went on to say that Canada finally placed a hold on the overnight lending rates. They're talking about the Bank of Canada basically pausing the rate hikes. And they're saying this was the sign many would-be homeowners were hoping for. According to the survey, more than 1/3, 36% of Canadians who chose to pause their plans say they intend to move forward with their buying intentions, but only if the central bank maintains the current rate for several consecutive months. Okay, that's an interesting caveat there. So about 1/3 of the people that left the market have come back, but they might leave again if the interest rates start to go up again. So that's understandable. But it also shows that we still lost some buyers in the market. Even though there's people coming back, at least according to this survey, about 1/3 of them have come back, but that's still a pretty good chunk of people that just left the market. So obviously we'll see how this plays out over time. Gave you a few different kind of highlights here from some news that I'd read over the last week. Just to kind of recap, if you're nervous about what your mortgage payments are going to look like when your renewal comes up, it's good to start planning ahead. So talk to your mortgage broker, look at options, look at your budgeting, at least use some calculators so you can see what that might look like and what that might do to your payment. Find out if you would be able to actually refinance or if you'd be forced to renew with your current provider because of the stress tests and everything at the new interest rates. That's something you can investigate with your mortgage broker. Then we talked about the optimism that people are still seeing in the market apparently. according to this survey. That does fit with my experience a little bit. We're starting to see more people that are optimistic about it, or they're pessimistic about other markets. That was a little bit more on the investing side. If you think about it, it was talking about baby boomers and how they think the market's going to perform compared to their other investments. And then we ended with talking about how sideline buyers are getting back into the market if the Bank of Canada can manage to maintain rates. So obviously we're still early in the spring market here. If you're looking at buying or selling a home in the Edmonton real estate market, I'd love to help you out with that. The best way to get started is actually with a free strategy call with me. If you go to booktrevornow.com, you can actually just select a time on my calendar. You can book a 30-minute call with me. You can ask me anything you want about the Edmonton real estate market, buying or selling, your specific situation. I'd love to help you. There's absolutely no obligation. I'm just hoping that if we hit it off and you like me and you think I can help you, that if you do end up buying or selling a home, that you will become a client. But if you don't, and we just have a 30-minute call and I'm able to help you, that's fine too. So if you just go to Book Trevor Now, select the time on my calendar, and looking forward to chatting with you. Anyways, thanks everyone for watching the video. I hope you got value out of it. Again, make sure to like and subscribe. If you want to watch another video, click over here. And if you want to subscribe, you can click over here. All right, thanks for watching. And I will see you on the next video.